Good morning, Scott Riley, T3 Live. Welcome to today's late morning call. This is going to be a brief one because there's a lot going on. I got to get back out there. What I'm going to do is I'm going to focus really just on the S&Ps so you know your levels, you know what we're looking at. Yesterday I did a whole recap on levels and the angle of this ascending channel to the upside and how they're always good to follow until they get broken, where you have to know your time horizon, whether you're a short-term trader, momentum trader, a macro trader, so you know what your commitment level is. We saw a few signs that we were getting ready for some type of shaking of the tree or some type of correction. Last 3 days, I know I've been a little bit off. Stocks have had no momentum. Breakout levels that stocks were getting through in the past 30 days were not going through. They were failing there. And then even the end all, which I talked about, was the VIX closed on the highs of the day yesterday while the market was well off the lows, which was a divergence you had to take notice. So I also think that a lot of people were kind of lulled to sleep as Apple has had this tremendous run, and while everyone's paying attention to how great that's doing, the breadth of the market, is getting more narrow. So anyway, let's take a quick look at the chart of the S&P. Here's the SPX, just so you know that ever since this December 20th gap and go, we've had pretty much two different, uptrends, but this has been the ascending channel. And unfortunately, ascending channels typically resolve to the downside. So if you take a broader look at it, here's the upper end, okay, which we were hovering above, and here was the lower end. And within it, if you want to look on a real micro level, this is what it's been hugging, during this entire rally, besides when it breached, okay, real quickly through it, about a week or so ago. Remember, you had the push-through failure, led to a 3-day down move. So now we were opening below this area or this angle that's increased here. So the question is, can this hold? Okay, this just say we're opening right near it, the 1333 to 1336, off the open, or do we close on it, to then give us a further down move? If you want to look at the spiders, because a lot of you guys trade that, let's do that. Here it is. This is where the gap starts, okay, from that gap up from a few days back. So that's 133.64. That's the low. So let's see how the market handles this 133.60 area in the first 30 to 60 minutes. Question is, can it hold it? This is where one of the moving averages is. I think that's the 10-day. Okay, so a test of the 10-day is fine. Strong markets follow, okay, the 10-day moving average. Strong markets also follow the 20-day. You can even have a correction that holds the 50-day and be fine. So think about how spoiled you are if you think that markets can correct a little bit. We're extended. Usually the strongest stocks ride the 10-day and the indices don't. This has been the indices and the strongest stocks. So we were kind of prone to a shaking of the tree. So you go back to the chart of the spiders here. And what I'm going to look to do is I'm short the diamonds and I'm short the Qs and I'm long some VIX against some of my hedges. So I'm going to cover some of my diamonds and my Qs into this area of support. I'm going to see how we handle the first hour. I'm going to see if any key stocks can go positive, any groups could possibly lead us out. But this is your spot. If we can't really rally off this and you see stocks heavy, we could easily fill this gap, which takes the spiders down to 133.14-ish. And then, you even have the 20-day moving average right around here. Okay, so this to me is, if we get really severe today, this is where we probably can go, which is about 132.35. If today is going to be muted and it's just going to be a shaking of the tree, a day in the life, I think this area holds. So here's your support one. Here's a mini support if the gap gets filled, and then here is the bigger support. So that's the plan that you have to have. If you have some looking at strong stocks from the previous day to see if they can go positive, maybe you could trade out of some. I'm long Qualcomm. It closed at the highs yesterday. It's down 45 cents. I'm going to see how that shakes out. I'm also long some of that Hasbro into the end of the day on that news, see what goes on there. Obviously Apple's only down $1 or so. It'll be interesting to see if they can take that positive. Look at the banks, see if there's any rally there. The banks kind of failed yesterday. A lot of the strong ones opened up and closing the lows with a small outside day. Goldman Sachs couldn't get through that 117, so it became a no trade. Even IBM failed, Caterpillar failed. A lot of stocks failed yesterday at momentum levels, giving you some clues to pull it back. So at this particular point, definitely tune into the radio, tune into the chat. We'll be on there, the entire morning trying to uncover clues on whether or not today will be just Well, a shaking of the tree and a minor move to the downside that closes off the lows the way we've done for almost the last 30 to 35 days, or no rally, trend down day, speed, composure changes, and it's time to switch gears. I think a lot of you guys switched gears this week. We did go from being long only about 2 weeks ago to in the last week long with hedges, and obviously the hedges have hurt. But yesterday they started to actually protect us, and now today hopefully they protected you where now you could really manage your positions a little bit differently. And if you just say you're a macro investor, these things could pull down to the 50-day and you should not be worried. You go back to the chart one more time, we could break this this trend, okay, this ascending channel, so to speak, and still pull back to the 50-day moving average and on a macro level still be fine. If you look at where we've come from, this has been a really huge move. So, from the October 4th outside day reversal, here's your low, another low, a higher low. Like I've drawn this many times in this morning call where you could extend this up and, we could retest this longer term trend at some particular point. But obviously first, we got to break this ascending shorter term trend and then get through here and then we'll figure it out. So, choose your level, choose your time frame, do what makes you feel comfortable. This has been Scott Redler, T3 Live, the morning call. See you at the recap today. Have a good day.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.